Mr. P.S. Jayakumar, Managing Director of Bank of Baroda, joins us now. Mr. Jayakumar, good morning. Thank you for joining us. My team was telling me that you have a hectic morning and you kindly agreed to join us live on the show. So really, appreciate that and thank you for that. I'm going to first, get the broader questions out of the way before we speak about Bank of Baroda. And just to clear the air, I want you to use this forum to clear the air. What is your exposure with the PNB scam directly or indirectly, and does PNB owe any money to BOB?
See, I would start by using a disclaimer. I don't know whether the word scam is an appropriate one. But as far as Bank of Baroda is concerned, well, last evening we released to the stock exchange also that we do not have any LOU outstanding with respect to these particular accounts as regard as PNB is concerned. There is a exposure of something in the order of 250,000 US dollars for one of the companies named in the FIR, but we do have confirmation from the bank providing the LOU that they will honor it because it's not connected to gem and jewelry. So the point I'm saying is we don't have any exposure.
What about your own LOUs? Have you looked at all the current LOUs which currently Bank of Baroda has given, and can you confirm to us that there is no problem whatsoever, everything has been backed by collateral?
So you're asking too many questions at the same time. So let me try to put the points to you this way: that we have always had a proper system for making sure the LOUs that we issue are reflected in the books of the accounts. That said, in the context of what has happened, we thought it would be appropriate to do a full callback on all the SWIFT messages that went on fund transfer on the basis of LOU during the course of the last 12 months. And we have no exception to report. In other words, whatever LOUs we have issued are fully recorded in the books of the bank, and lines have been marked against the respective borrowers. As far as specific transactions are concerned, we do approve credit to the customer on an overall basis, and on that basis, these LOUs have been issued.
Mr. Jayakumar, but in the light of the Nirav Gate, I'm not going to use the word scam since you're opposed to that. Do you think that there is a fear that there could be a contagion in the gems and jewelry sector? And as one of the top bankers of the country, would you go slow on your lending to the sector per se, or maybe then ask for higher collaterals from the gems and jewelry companies?
So let me explain to you, a couple of years back or maybe 18 months back, we concluded we really did not have too much of expertise in underwriting gems and jewelry segment. And so we took a decision to cap our lending there. It's nothing to do with the gem and jewelry segment is good or bad. It is just that you lend only when you understand the risk, and the bank needs to have some specific knowledge with respect to the sector. We have other priorities, and so we've not focused on building capabilities around this sector. So our exposures are very much capped, and we do not have it. It's got nothing to do with this particular instance. It's been there for the last 18 months.
In general, do you think PSUs now will go slightly, easy on giving more line of credits? The reason I'm asking you this question is because this question has been asked to me, and we have discussed this, with other industry observers, that PSU banks now may be very stringent in collaterals and they may decide to really slow down this line of business.
You're talking about discounting against LOU in general, or you're talking with respect to gems and jewelry segment? Because there are two different answers for either way you look at it.
No, I'm looking at in general, because do you think that discounting against LOU is giving letter of credits, that's a big line of business for banks. Do you think banks are likely to go more stringent on that? Do you think there is going to be much more scrutiny? There is going to be much more collateral requirement?
See, I think we have to look at it in this manner. When a bank extends credit, whether it's in the form of letter of credit or it's in the form of other forms of working capital, or whether it's term loan, obviously it has to look at the credit risk from every angle and then take a suitable decision. So that doesn't change because of this crisis. Maybe there is a greater level of scrutiny to certain sector, but that's fine. As far as LOU market itself is concerned, what could happen is some banks are restrained, some banks continue. but whoever continues will make sure they provide appropriate degree of care from a point of view of confirmation of LOU, etc. So some of these issues don't repeat again. Now, hypothetically, a large number of people exit out of the LOU market, let's say these are overseas banks, etc. Then the borrowers have always the option to come to banks like ours and take the letter of credit over here, and we discount against our own LOU. So in that sense, I don't see any particular reason to believe that the credit flow would get affected, although it is possible that the exposures between banks may change as a consequence thereof.
Okay. I'm keen to understand, Mr. Jayakumar, how much exposure does BOB have to Rotomac, and does it have any exposure in the first place?
Well, this is a public information. We have disclosed it to the stock exchange. We have an exposure of about 456 crores, if my memory serves right, but somewhere around that, yeah.
Okay. And how much provisions would you have to make then for Rotomac? Because, you know, from Nirav Modi, the focus has now shifted to Rotomac.
You will not be able to find any fault with us on these matters. The fact is, when I joined in was it October of 2015, around that time in December or January, we realized that this particular account, as with many other accounts, had challenges with respect to recovery, and we looked at what is a potential realizable value, and we took provisions on this account and many other accounts at the time on a basis of a principal basis, not based on IRAC norms. As a consequence of which, we had fully provided for this account very, very early on, and so we do not have any additional provisions to be taken. I think somewhere in February or March of 2016, we had fully provided for this account.
Mr. Jack,
but were you already aware that Rotomac is not going to be able to pay up, that you've already fully provided?
See, there are two things over here. One set of issues that have been raised by one of your sister publication as well, as to whether we knew it was a fraud and we delayed submission to the CBI, etc. And the question is, what is the recoverability? These are two different questions. Recoverability is based on collateral, realizability of collateral, etc., etc. And so that's a different course of action. As far as the fraud itself is concerned, they have to go through certain process to establish there is a fraud in the first instance, and then from there things take their course. So yes, at that point of time we were aware that the likelihood of recovery because of the absence of any collateral, this all of us done in the trade transaction, was going to be significantly impaired, and we did what anybody should do in these circumstances, which is to be conservative. The other point I want to try to emphasize over here, this is nothing to do with Rotomac. In general, our provision numbers are conservative. You could see that from the fact that our provision coverage ratios are among the highest in the industry. So these are all part of a process of keeping the balance sheet of the provision numbers being, fairly adequate and keep us in the safe harbor with respect to these exposures.
Kumar, my follow-up question, it's not about PNB, it is about PSUs in general. Everyone thought that after the new RBI guidelines and after the AQR1 and AQR2, all bad loans would be provided for. But each quarter we get a different reasoning why NPAs have not stabilized. It's like peeling an onion. You keep on layering, there are layers and layers, and with every quarter we discover that there are problems which bankers are recognizing.
You see, it's a moving, things keep moving. It's not that, we kind of, it's all anchored. So that would be probably one reason why that is the case. Now, let's look at the fact that now we have a new method of recognition of provisions with respect to SDR and S4A. And so that by in itself will result in increased provision, right? So it's not about non-disclosures. It's about the fact that subsequent events take place which make some of these things not recoverable. But the real issue to my mind is like this. In normal course, let's say I had 40,000 crores of provision with us. In normal course, we expect some of these to get recovered, some new provisions to go on. So the add-on numbers tend to be fairly stable. In our case, the recovery numbers have been much more slower. But as you were just discussing just before you started this interview, you were covering the steel sector exposure, and you had a sense of optimism around that a large part of the issue, nearly 25% of the total NPA numbers would get stand resolved, and that the recoveries would be much higher than what has been provided, or the book value of those assets are. So it's a cycle. We should see the reversal of the cycle sometime next year.
Yeah. Mr. Jaikumar, I'm just going to come to the steel sector in a second, but I just want to take this on record that when it comes to the Rotomac case, you will not have to make any other provisions. It's already a closed chapter for you.
It is not a closed chapter for us in the sense we have to recover this money and we got to follow these matters to the logical conclusion. But is there any incremental financial loss on account of that? The answer is no.
Make additional provisions also if need be in the future quarters.
Absolutely.
Okay. Now I'm going to come to the NCLT.
No, there won't be anything.
Okay. You know, the exposure of 2.5 lakh crore rupee to the 5 accounts, that's Bhushan Steel, SR Steel, Bhushan Power, Electro Steel, Binani Cement, they're all seeing very positive developments, like you also just reiterated. And they have seen bids of almost about 1 lakh crore rupee already coming in. What's your view on the same? And do you finally see these accounts seeing resolution and there'll finally be some light at the end of the tunnel soon?
Well, that's the expectation. I mean, the NCLT processes, though, this is all being, there's no analogy or precedence before, is moving on, so it looks very smoothly. And for all the reasons you explained, the bids are there and they would all reach a logical closure. There might be some people appealing to the courts, etc., but they would all get resolved in due course. So I'm hoping in an optimistic scenario, the outcome coming in the first quarter of the financial year, but more realistically somewhere in between the first and the second quarter of the next financial year. The only transaction in which we are closely involved as Bank of Baroda is Binani. The others we are not the leaders of the consortium, so to say, and our share is is very, very small. As far as Binani is concerned, we see that getting to a resolution hopefully this quarter or at best the following quarter. And the bids we have got seem to be very good.
Okay, now I won't get into who's going to get it, but eventually what I want to understand is that what kind of accounting practice will that reflect when the resolution is finally done? Have you provided for the Binani loan completely, or as of now, you will still have to take some more haircut and the entire write back will not be there in your balance sheet? I just want to understand the procedure here. I think jumping I don't want to jump to conclusion right now. We know that the bid prices are good. So one assumes that a substantial part of the principal extended by the banks would come back, as would be the case with other creditors as well. We have to wait for it. As far as Bank of Baroda is concerned, as I've told you before, we provide conservatively to make sure that it takes into account the likely outcome, a more conservative outcome. And as such, we do not see any additional provision happening with respect of Binani. On the other hand, we are optimistic that we should see write-backs coming in. There is enough and more talk which has now started, and it has started not with market commentators like me and Aisha and industry observers, but from industry veterans, that India does not need so many PSU banks. You don't need more than 3-4 PSU banks. What are your thoughts on that? I'm not trying to put words in your mouth. I'm not looking for any controversy here, but it's high time we start talking about it, sir.
So let me stay to the topic I know, which is Bank of Baroda. You ask me anything on Bank of Baroda, I'll be willing to answer it. But outside of that, I would prefer to keep myself. These arguments can be made. Some would argue we need large number of banks, so there is competition. Some would argue we need a fewer number because they are in a better controlled environment. Some would say we need public sector participation. Some would say don't need it. So these are points of view, and different shades of opinions or points of view always exist in a large country like ours. So that's where it stands. As far as my personal opinion is concerned, I tend to keep counsel on these matters to myself.
But purely as an observer, if I have to ask you, so Mr. Jaikumar, how can the banking system be fixed? Because NPA concerns, they are not getting addressed completely. Periodically, we have these, cases of Nirav Modi or a Windsor Diamond. What can be done to fix the culture in the lending system? So, how would you respond to that?
So here is the way we are looking at it in Bank of Baroda. So we put together a transformation journey, which involves 3 elements to it. One is about our processes and how do we fix what are the processes that are broken, how do we make them more contemporary. The second thing is with respect to digital and digitization, and the third and a very important element is relating to human resource transformation and energization. We continue to work on these three things. These are the fundamentals for running any or transforming any business. Bank of Baroda starts on a good note, but that said, over a period of time, technologies have changed, markets have changed, and we have some catch up to do, which is what precisely we are doing. And that's where it ends. Now, we are in a considerably ahead in the transformation journey. The media and everybody tends to focus on this quarter's number, and that's understandable. But the fact that this transformation journey is beginning to look positive is evidenced by our last quarter results, which was excellent on all parameters. We had the highest operating profit, 40% growth on year. We had a large growth, a solid growth in the assets of the bank, 15% growth on an average basis, with a 30% or 35% growth in the mortgage segment. We saw a significant improvement in the quality of the corporate credit as represented by the rating of these customers. We saw continued improvement in the provision coverage ratio. We saw a substantial decline in the cost to income ratio. Our domestic CASA ratios improved, our margins improved. So in all these quarters, whichever dimension you take, it was a fairly good result. And I hope we continue to keep to this track. And the only way to do it is to make the bank stronger by dealing with the fundamentals that impact the performance of the bank. That's where I would stop.
Okay, Mr. Jayakumar, if you give us a guidance of what you're going to do in the next 1 year, we'll talk about that and we'll ignore what you did in the previous quarter. But anyway, moving forward, lastly, want to understand what is the progress and resolution of non-steel sectors like power, EPC, textiles, as well as auto ancillaries.
Well, it's going through the same process. Many of them are on NCLT and therefore they go through the same NCLT resolution process. The bounce back on the steel sector has been very strong, and the performance of the cement sector has always been good. So these assets have greater demand and higher valuation. Certain other sectors are not in the same position. So we continue to focus on getting recoveries. We have had some success, and we expect some level of acceleration to happen. In these circumstances, the best thing for us to do is to keep evaluating whether the provisions numbers that we have taken are adequate in the context of expected realization, and make sure those balance sheet of ours reflect them, which is what we are doing right now. So I'm broadly of the view that
we could see resolution in the next 8 to 12 months.
I would think so. I would see a lot of resolutions happening, not only with respect to steel sector, but I would think the resolution will also happen because of pragmatism, of willingness to take the write-off and closing it and moving forward.
Mr. Jayakumar, such a pleasure, sir, speaking with you, and thanks so much for taking the time out and delaying your already busy calendar and some meetings I believe that you had. Thanks so much.